Hey, we're back with another Opendoor video. Today we're going to look at charts, we're going to look at the news, and we're going to look at a video from Eric Jackson. And we're going to see where can Opendoor technology go to next as a company and on the chart. Here we go. All right, first thing we want to talk about is Opendoor surges after D.E. Shaw reveals 6.4% stake. Opendoor technology is soaring after a filing showed D.E. Shaw held a 6.4% stake in an online real estate company as of November 13. This bears a close resemblance to the reaction after Jane Street revealed a 5.9% stake in the company in late September. Some analysts are saying because of the warrants, it may provide opportunities to profit from relative value trades between warrants and listed options. But only D.E. Shaw knows why they bought Opendoor at this current time. And here's an article I found kind of interesting. What traders should watch next for Opendoor? It says the combination of strong quarterly results, insider buying, and positive analyst coverage creates a compelling short-term narrative for Opendoor. However, sustained momentum will require continued execution on the strategic transformation and further progress toward profitability. What should investors look for? They need to monitor upcoming quarters closely to see whether the revenue beat represents a one-time occurrence or the beginning of a sustained trend. The revenue beat last quarter earnings, but will we beat next quarter earnings? So we got to see if it's a trend. Will we keep beating revenue earnings quarter by quarter? Another thing to look for, home acquisition rates will provide important signals about whether the technology investments are translating into competitive advantages in the marketplace. And this next paragraph is definitely true. Opendoor's ability to maintain positive momentum while managing risk will ultimately determine whether their recent rally marks the beginning of a genuine turnaround or simply a temporary bounce in an ongoing struggle. But for now, the combination of factors driving Friday's surge has certainly captured market attention, which means there's a lot of uncertainty in the market, economic-wise, and especially the housing industry. But Opendoor is kind of looking pretty strong. We're not going straight down, even though the uncertainties in the market don't look too great. We're holding a decent price area, so that shows strength and positive momentum. It's kind of like what I said before. If we can hold a certain price range until we get some good news, that's going to be very good instead of going down then coming up once we get good news. It's better to trade sideways, consolidate, and go up. Now, Opendoor actually traded pretty good today. Price was really low, I think in the $5 range at some point, but we bounced back and we closed up pretty good. Could we have went higher? Possibly. I think the whole stock market could have went higher in my opinion, but that takes me to this right here. Trading economics, the data reports for next week. I think the stock market could have actually went higher today, but I think it was held down somewhat. And this is why. Tuesday, we have some crucial data reports. Monday, not really much at all. We could see another green day Monday, but be careful before Monday's close because there could be some volatility. Monday in general is not too much a bigger deal when it comes to data reports. But Tuesday is the big one. Tuesday, 9:30 a.m. Eastern Time, we have the PPI, retail sales, core PPI, PPI, food, energy, and trade. We have a lot of data reports coming out at 9:30 a.m., same time the stock market opens. Then we have some more. 10 a.m., house price index, business inventories, 11 a.m., pending home sales, month over month, year over year, 11 a.m., Richmond Fed manufacturing index, and the list goes on and on and on. So Tuesday is going to be pretty huge. Then we have Wednesday. Wednesday, we have more data reports. We have the MBA 30-year mortgage rate at 8 a.m., 9:30 a.m., jobless claims, continued jobless claims. These are big reports that I'm naming. And it goes all the way down from 9:30 all the way down to 11:30, 12 o'clock, 1 o'clock. We have 15-year, 30-year mortgage rate. And then when Thursday comes around, it kind of cools off. So in my opinion, Monday, Tuesday, and Wednesday are going to be pretty volatile. Monday morning shouldn't be too bad, but late afternoon Monday, Tuesday, and Wednesday are going to be pretty volatile. Then Thursday and Friday will probably cool off because not too many data reports is coming out after Wednesday. And I don't know if you've seen this video or not, but it says Opendoor's rise. Why Eric Jackson is betting on Opendoor, right?
Well,
Check this out.
I've always been a tech investor, and But earlier this year, I decided, hey, one of our biggest successes at my hedge fund in the last couple of years was that we got into Carvana a couple of years ago, early on, after it had dropped from $400 to $3.50 in December 2022, and then it sort of started this road back, and they've recently eclipsed $400 again. I got in at $15. Their AI model flagged it at $11.
Eric's paying for dinner.
So, basically earlier this year, I was meeting with our engineering team and saying, hey, we got to do more of this. We're building all kinds of different models to do predictions on earnings events and all this. Let's just find more 100 baggers. And so that led us to discovering Iron and Cypher earlier this year, sort of when they were like $9 and $3, still seen as Bitcoin miners, sort of not as sort of next gen AI HPC
Neo cloud, if you will.
Neo clouds, right? And then from that, like I noticed immediately the retail responded to that, and this notion of like, oh, the next Carvana, I missed Carvana. I'm not going to miss the next Carvana. Like there was definitely FOMO out there. People were kind of bored of the Mag 7. They were just sort of looking to go out further on the risk curve for sure. And then a lot of people were asking me, hey, I remember Eric used to talk about Opendoor. Whatever happened to Opendoor? And that sort of sparked my reinvestigation of Opendoor. They were like 50 cents at the time. They hit a low of like 51 cents in June of this year. I got in the 70 cents range and then went public with my thesis in mid-July in 80 cents, sort of like high 88 cents or something like that. And immediately it took off. And there was just like this palpable energy. It was global, sort of to touch on something Dan said. Like I was getting like messages from Mongolia, Antarctica.
Right.
I have there's a crew of fishermen in the middle of the Bering Sea that were out on a 10-week, fishing for cod. Like Captain Mike of this fishing vessel was on Starlink buying Open, taking all the 60,000 that he had made in the past 6 months fishing and going full portfolio into Open, and encouraging the rest of the Open army. So I mean, it's been a wild ride, international, like hunger amongst the retail in kind of finding the next big thing, and it's been fun to be a part of it.
So I don't know if you've seen that before, but it's an interesting video. Give you some insight of Opendoor, or how Eric Jackson started with Opendoor and how he also started with Carvana. So nice video. Now let's look at the charts. So Opendoor closed at $6.75. After hours, we're at $6.65. This is a weekly chart, and weekly chart we're pretty much even with the previous week. We have two candles side by side on a weekly. This right here sometimes gives you a hint about what's coming next, but it's not always accurate. It's saying flag bullish because, as you can see, we had a bullish flag pattern right here because of this green candle from last week. But as you can see, we had a red candle, so it didn't really come true, right? But it's something to note that Opendoor could break out into a bullish flag. If it can keep going up, we need to break around $8.60 for this bullish flag pattern to come true. And what I've said on many videos a long time ago, weeks and weeks ago, what I want to ultimately see is this weekly RSI to come down some to maybe around the 50. Because once we go down to the 50 area for RSI and we consolidate and hold that area and then start to go up from there, we can start a bullish uptrend similar to this right here. But it's always hard when RSI is so high, when you're trying to go even higher, because the technical indicators need to reset sometimes to continue a forward momentum going up. MACD is starting to reset a little bit, which is good, but it's still pretty high. RSI is in a decent spot. If we can get to a 50 area of RSI or lower and consolidate a little bit and then go up, we can actually see Opendoor start to go to 7, 8, 9, 10 plus. But for that to happen, it's going to take some time. So gotta be patient with Opendoor when it comes to technical indicators. It takes time, but when it does reset to a good area, 50 area, or around that range, you would definitely benefit from it because you don't have so many profit takers in the way. So as you can see, Opendoor had a decent day today. Nice green candle here after 2 red candles, and we are in the downtrend. As I previously noted on an earlier video, that's the downtrend we're in at the moment, but we're kind of close to breaking the downtrend right here. To break the downtrend, we have to break around area right here. We need to start trading right above this line right here, diagonal line right here. And for that to happen, we need to break around the $7.35 area and higher. Then we will kind of be back into somewhat of an uptrend, but we got to break that 735, 750 area. And for the daily chart, RSI, it's starting to look a little bit better. We had a nice downtrend right here from all the way up top here. then all the way down, and then we have a nice upward angle right here from the RSI, which could possibly mean an uptrend if it continues to go up. But that all depends on data reports on Tuesday and Wednesday. A lot of people who ask about what's going on with Opendoor, how come Opendoor is going down? Opendoor depends on the data reports by a lot because it's a recovery stock and the economy needs to recover for Opendoor stock to recover. Once the economy is starting to recover, Opendoor can recover. So that's why those data reports Tuesday and Wednesday is going to be important. And here's the diagonal resistance line for the hourly chart. And then you can see it a lot better here. And we need to break that area. We try to break it today on Friday, but we couldn't really do it. Came right back down. But we need to break it Monday and start trade up in this area. Then we can start, and then we'll officially be in somewhat of an uptrend if we start to trade around this area right here, which is same thing I just said, 730 to 750 area. And now we'll draw some support and resistance for Opendoor. First resistance is going to be the 705, 706 area. The next resistance is going to be right around this area right here, the 767 area. Those are going to be the two resistance for Opendoor. Support we're looking at right here at 625 area. As you can see, yesterday we test below that support, and today we touched that support as well, and we bounced back up. So 625 looks like a decent support at the moment. And then after that, if you want to support lower than the 625, we're talking about right here at the 595 area. So that's where we're at the moment for Opendoor support resistance. And once again, we're right in the middle of 706 and 625, right in the middle. So that's decent. So Monday, hopefully we can, try to test that $7 area for Opendoor technology. And for the daily chart, let me delete some of these lines. And I want to see how we're trading as a whole for the whole entire run we've had so far. So we started at 58 cents, came up to $2.70, and had support at $1.68, right? Then we had this long run right here from 168 all the way to $10.87. That run right there is what is holding Opendoor from going up higher. When you have a long run such as this, you're going to have some consolidation and some profit taking. As I always say, when you go up fast, you'll come down fast, or you'll come down to the middle or just a little bit below where the high of the pump is and then consolidate. And that's kind of what we're doing right now. The run started right here at 168. The run started right here at 168, right? Here is the line, support, then the resistance area right here. And then the next one I'll put right here at the top of the run, 1087. So if you look at that, we're still in a decent area for Opendoor technology. A bearish area for Opendoor is trading in this area right here. A bullish area would be trading in this top section right here. So we're still above the top section, but we're kind of low, right? The 595 is right there, and we're right here to 665. But if we can hold that 595 in a 1091 area, there's nothing wrong with Opendoor technology chart at all if we can hold above here. And if we do dip below here, let's go right back above it. Kind of like what happened during the earnings area, this candlestick right here. We did dip below it, went to 524, and then the next day we went right back above that line right here at 595. So that's good. But now we're starting to trend down toward it again. So that's why you want to hold this 595 and not go any lower into this area right here. So is Opendoor doing fine? Based on this chart right here, Opendoor is doing fine. We're not talking about any economic situation, rate cuts, or anything like that. Chart-wise, Opendoor is doing fine based on this. Now, if the economy gets better, rate cut in December, where I think we should be trading at is right in this area right here, between $8.50 to the $9 area, because then you'll be approaching the resistance up top at 291. With good news, we should get out of this area where the 595 and the $6 area and trade near the higher portion of the resistance. And I'll put a line right in the middle so you can see what I'm talking about right here. So now I have a line in the middle between where we need to go and where we need to hold. So that's $8.60. So if we start trading above the $8.60, Opendoor could be testing that $9 to $10 area once again. So when you look at this, you'll see that Opendoor is kind of trading right in the middle of the whole price channel from the start into the high, because we're right here at the $5-6 area. So we need to start to go this way. If not, let's trade sideways right around here and then go up above this area. So that's what we're looking for. Opendoor technology. Thanks for watching. Subscribe, like, and comment. Have a great weekend.